Hello. Surprise! The IRS knows about your crypto or your client's crypto. Maybe. Well, maybe you or your client has been dabbling in crypto, doing a little crypto. Well, the IRS has just recently sent out thousands and thousands of letters in the last couple of months to what? Reignite their enforcement. They're beginning to crack down again on those who dabble or trade in cryptocurrency. Welcome to Let's Talk Taxes Tuesday with myself, Nafisa Fudayil, where we tackle tax controversy and other IRS tax debt issues for you so that you can better protect and serve your client and increase your expertise in tax representation. So we're going to get started today. What we're going to talk about is IRS and crypto. And specifically, what we want to focus on is number one, what's really going on with IRS and crypto in 2025? Why it matters to you. What are these IRS letters concerning crypto that the IRS has sent out? What are some tax tips and pro tips that you may be able to use or be on the lookout for? And finally, we're going to have some closing remarks. So let's start to jump right in and get started, right? Okay. First of all, let's look at what's going on. What has been going on? Well, the IRS has recently, in the last couple of months, started to reignite their enforcement, their crackdown on crypto non-compliance. In other words, if you are one who trades in crypto, maybe your client has traded in crypto, you know what I mean? The answer to the question on that 1040 in that section right under the statuses where it asks you, have you traded any digital assets? The digital assets section, when it asks you if you've traded any digital assets, sold any digital assets, this is the non-compliance. You're supposed to answer yes or no. Well, the IRS has gotten wind of, right? Or people have, third parties have reported various crypto transactions that have been taking place on their platform or their exchanges to the IRS. And the IRS is starting to ramp up their enforcement by sending out these letters. Now, if you recall, maybe some of you remember that it was 2019 when the IRS first put that question, the crypto question, the digital asset, or if you want to call it the virtual currency um, question on the tax return. Now, originally it wasn't on the front of the 1040, but they eventually moved it to the front of the 1040, trying to get a handle on how many people, how many taxpayers are actually even engaging in any type of crypto transactions. So you're just supposed to answer yes or answer no, right? This was the thing that was going on. So now the IRS has said, hey, we need to get a handle on this. Crypto is becoming more and more mainstream, more businesses, more individuals of and your clients are starting to adopt crypto and use crypto for various transactions. So the IRS says, "Hey, let's start cracking down on what's going on here." Now, why does any of this matter to you? Let's look at the big picture. Well, if you're an attorney, CPA, or enrolled agent, this could be a major signal to you. This could be a major opportunity to you. Now, what is this signifying? What is this signaling? Right? It is signaling number one, the IRS is gearing up for what? More audits, more enforcements. There may be more penalties, right? And a more demand for your services as the IRS starts to send out more and more of these letters. Now, what are these letters that the IRS is sending out concerning crypto? There's basically two letters. Really, three letters, okay? But three letters. The first one is the IRS letter 6174. There's 6174 just plain, and then there's 6174A. A is in apple. Now, these two forms letters are really just informational letters. The IRS is just basically saying, hey, I know you got some crypto and you haven't reported it. So I'm going to need you to just be aware of the crypto transactions that are required to be reported on your tax return. So it's just an informational. It's not requiring you to do anything in terms of you responding to the IRS immediately. They're just informational. By the way, we know you have some crypto. We know you've been trading. We know you've been doing something with some crypto transactions and you haven't reported it on your tax return. We just letting you know. Just informational. You don't have to do anything. So maybe your client has received this letter. I know that I've gotten not a lot, but one or two clients who have called me and asked, "Oh, I got this letter." So we had to respond, tell him, inform him about it, and then see whether or not he needed to respond. So maybe you have received these questions from your clients, and if not, we'll talk a little bit in a minute of what you need to do, right? The other letter does require a response. And this letter is the letter 6173. Now, this letter does require a response from your client, and it is more urgent, right? Either your client needs to amend their tax return, right? It needs to go through their records, maybe provide an explanation to the IRS why the IRS has information and this is usually going to be for those clients who have a lot of transactions, right? And large dollar amount transactions. These are the clients that are usually going to have the crackdown with this particular letter. But there are not a lot of these letters going out, but there are some of these letters that are going out. So you need to make sure that if you are engaged in this or your client is aware of what's going on and what are their responsibilities in terms of reporting these crypto transactions. And a lot of clients, they just don't even know that they're supposed to report it. But you have to understand that crypto and how the IRS looks at crypto is a capital asset, right? And as a capital asset, it's kind of treated like stocks, right? So if you sell your stocks, right, or if you sell your crypto, right, that's a taxable transaction. If you trade crypto, right, because a lot of times in the crypto world, you don't necessarily sell your crypto. A lot of times you may be trading your crypto or trading, let's say your Ethereum to buy another coin, right? Or you may be trading a meme coin to buy another different type of cryptocurrency coin, right? So you're not necessarily selling the actual crypto in terms of converting it into USD into dollars, but you are really trading it with another cryptocurrency. This is considered a taxable transaction, right? Or if you're engaging, you get airdrops, a lot of airdrops, crypto airdrops that people are having. That's a taxable event. Some DeFi transactions, those are taxable events, right? So you want to make sure that you are aware and you are informed and that you are educating your clients as well. Okay. Remember that form, the 6173, that is the letter that requires a specific response. The other two are just informational, and IRS is just saying, hey, you need to get your stuff in order because you may need to be amending your tax return or reporting these taxable transactions on your tax return. And another one that most people don't realize who are in crypto is that a lot of crypto rewards. Sometimes if you're holding certain cryptocurrency, you may get a reward, right? Those rewards are taxable transactions. Okay. So those need to be reported on your client's tax return or your tax return. And this is just like a little quick tax tip, right? Because you might be saying, "Oh, okay, I need to report it." Well, if you anytime you trade your stocks or any other type of capital asset, you're usually reporting that on a Schedule D on your tax return, correct? Well, same thing with cryptocurrency. You may be reporting those cryptocurrency transactions on your Schedule D if it operates more like a crypto asset, right? Or you might be reporting them on Schedule 1 or Schedule C, right? If it's operating more like an airdrop or a DeFi or a rewards, it may be operating more like like ordinary income, right? And it could be a Schedule E. So these are really the three types of schedules that you might want to look at in terms of your client or yourself having to report those crypto transactions, right? The bottom line is it's going to depend how it's taxed and where it's reported on your tax return is going to depend on what type of crypto asset it is and what was the character of the crypto transaction that you actually engaged in that gave rise to the taxable transaction, right? And that's a little bit beyond what we're talking about today. I can do another video. And make sure y'all like and subscribe this video if y'all want to get other updates, and make comments if you actually want to have a detailed video on crypto transaction, because I can walk y'all through that as well, because this is definitely an area that we need to know and that is on the rise and is going to become more and more prevalent as we move along and more people begin to engage in crypto trading and engage in acquiring crypto as an investment as well, right? So we want to make sure that we taking care of that. Now, as a pro tip, this is the opportunity to start the conversation with your client, right? Start the conversation with your client about crypto so they can begin to understand what's involved in these different crypto transactions that they may be engaging in the world, and whether they give rise to a taxable transaction. Now, if your client is just holding crypto, for example, you have a lot of people who just bought Bitcoin, or they just bought Ethereum, or they just bought Solana or Cardano, right? They just bought and they just holding it. They're not trading it, they're not selling it. They're just holding it in their wallet, basically using it as a store of value or banking on the fact that it's going to appreciate in value, right? So they're not doing any of those transactions. But even if you're just holding it, you still have to be mindful, depending on what type of uh, digital asset you have or what type of crypto you have. Sometimes just holding it, they still might do airdrops. They still might do rewards, depending on what cryptocurrency coin you have. So you still have to be mindful of that. And beginning this year, 2025, so with the 2025 tax year, right, which everything in 2025 is going to be on your 20, is going to be prepared in 2026. But starting with this tax year, those cryptocurrency platforms and exchanges will be required. It's going to be a phased in approach, but they will be required to report those transactions, your crypto transactions. Just like you have companies like PayPal and Stripe are required to report like all those transactions to the IRS on a 1099-K, right? And just like your brokers, your stockbrokers, JP Morgan, Chase, Charles Schwab are required to report your stock transactions on a 1099-B, right? Starting with 2025 tax year, again, it will not be reported until you do your taxes in 2026, but they will be reporting a 1099, what they call a 1099 DA, digital assets, right? They would be required to report that, and it's going to be phased in over the next couple of years. So you might as well start getting your client used to having to do this and be on the lookout for this, because what you don't want to happen Is your client having this large tax debt bill? Or even if you do get clients that do have a large tax bill as it relates to crypto, you'll know how to deal with it. Okay. So this is just something to keep abreast on. We want to keep abreast on where the IRS is in terms of their crypto tax enforcement so that we can better serve our clients, right? And we can better position ourselves as experts in this tax representation business. And so my closing thoughts are basically this. Number one, make sure you like and subscribe my channel so you can get your weekly updates on our Let's Talk Taxes Tuesday. But number two, remember that crypto is still a very new area. I mean, it's about 10, 12, 13 years old now, right? Almost 15 years old, right? But it's still, in terms of being adopted by mainstream, it's still very new. And it's still almost like the wild, wild west in terms of taxation, and the IRS, right? And other government agencies are slow to catch up in terms of trying to figure out exactly how they're going to tax it, exactly how to capture all this data. So you want to make sure that you keep abreast on what's going on so that you can better serve your clients. And this is something that you want to do. So that's all I have for today. I just wanted to make sure that, hey, you don't get surprised when your client comes to you and tells you they got that crypto tax letter in the mail from the IRS. You know what they're talking about, know what to do. All right. So I want you all to have a fabulous day, and make sure you like and subscribe, and meet me next time on Let's Talk Taxes Tuesday. I'm Nafisa Manira, and you can also check me out, Tax Roadmap USA, if you want to find out more information. Till next time, bye.